everyone, this is Abhijit Chatterjee. Welcome to our weekly session of Chartsarefun. This is for the week of May 26th, recording this on Saturday, May 31st. We've had an exciting month. For the month of May, we just closed out last week. Bitcoin had an amazing climb. The Grayscale Bitcoin ETF climbed over 11% for the month. We've had some amazing moves in QQQ at 9%. S&P was over 6%. Small caps was a little over 5%. So overall, strong month. We believe we'll start off with today sharing Larry Williams. He's a very well-known Wall Street columnist, has many technical indicators that he's invented. He's written books. He often publishes his videos on stock charts. So we'll share some insights from his video. We'll also share the link that you can take a listen. And he's bullish. He feels that near term there could be a pullback in June, but then market is setting up for a strong move up higher into at least the October timeframe, and the usual seasonal pullback comes in October. But he's bullish for a rally this summer. And also, we will look at NVDA. We had talked about NVIDIA's earnings. We had expected a hit of or test of resistance near 143 and then a pullback. That's pretty much seems to be what's playing out. NVIDIA had an extremely strong quarter. It's just that with the China export controls and so on, their guidance for the next quarter wasn't as strong in terms of the call it the Whisper numbers, and took a bit of a pullback. But we think that it's going to be a shallow pullback, and then NVIDIA recovers to higher highs. So we'll talk about that. We'll talk about Bitcoin has been a leading indicator. We know that Bitcoin topped in January when the market topped in February. Since then, Bitcoin came and took out its January high last month, and 109,000 was the high. It took it out and went to 112. Since then, it's pulled back about $11,000 to around $103, $102. We feel that Bitcoin is signaling higher high in the market, in the sense that S&P 500 likely wants to take out its 6147 high from February. So we'll show you the S&P 500 chart, both from what happened over the week to its weekly chart, and then a little bit of a long-term monthly chart. We'll show you a couple of indicators that indicate where S&P's movement could be. One is from the bullish percent index, which is kind of talking about the overall strength of the S&P 500 component stocks, and then a market breadth indicator called the summation index. In particular, we look at the New York Stock Exchange summation index, and then finally end with a chart of small caps, the Russell 2000. It has been a bit of a laggard in terms of how far it is from its February high, but it's actually not February high. Small caps had topped out even before February. They topped out in November, which was somewhere in the 243 level. We expect small cap IWM to break out. A key resistance level it's at is 210. We think it'll break out and jump towards the 248. So with that, let's jump into our Substack site, chartsarefun.substack.com. We do publish daily blogs whenever the blogs get published. If you subscribe with your email, you'll get them. And we do our weekend chart patterns. That's often when we talk about various patterns. This weekend, we talked about the monthly patterns in these long-term charts and shared some of the key ETFs. Our YouTube site is also called Charts Are Fun. We just share our insights in the market. We are not registered investment managers, so don't use this as investment advice, but use these as insights and trends that you can follow from the charts and see some of its tea leaves. Let's jump right into what Larry Williams shared. This YouTube link we'll share on our video that you can go take a look. But this kind of is a chart that talks about Larry's cyclical analysis on what the future looks like. What you see here in blue is basically where he sees the cyclical trend of the market for the last couple of years. And we can notice that he had kind of talked about a pullback into 2025. That's his blue line pullback. We kind of got the pullback as the way he charted. The black line is what the S&P 500 is, and the blue line is what his sixth cycle indicator is. So we did get the pullback in the first half, just like the V had said in his blue line cyclical chart. And now we are recovering from it. And if you look at his blue chart, his recovery does show a bit of a pullback into the June to the July timeframe. That's where the blue line pulls back. And then from there, we can see that it's going to climb higher highs. And that's what we think S&P 500 is set to do. And it'll be interesting to see where the market, starts moving in the next several months. We're going to go straight from here into NVIDIA's chart because NVIDIA had earnings. We said it had strong earnings. It tested its key level of resistance at 143.43, came just above it at 143.49. When a price crosses the previous level, often it's an indicator of something bullish coming in the future. It didn't quite cross it. It kind of pulled back, and that was expected. Bit of the fact that they have a setback on the export controls. But Jensen Huang was in Jim Cramer's Mad Money show. He expressed a lot of confidence that the Trump administration is going to realize that China has a huge potential. Half of the AI developers, so the AI data scientists, according to Jensen, is in China. So with that kind of demand, he expects the best of US technology should eventually be exported to China, even if it has to be kind of modified to some extent from what's sold in US. But he's optimistic. He feels that there is almost a $50 billion of opportunity for these AI developers in China, and he sees strong potential for their sales growth in China and, of course, rest of the world. So this chart is showing us a potential inverse head and shoulder where a neckline at 143 is where we recently tested to then pull back potentially to this 113 level, which we believe could be a strong support. It's also close to where we see the 50-day moving averages shown in blue here. We have two moving averages, the one in red and the one in blue. When the red moving average in 200 is a longer term, had kind of declined slightly, but now since then has started climbing over the month of May. That means that the trend is now eventually poised to cross with a bullish cross and go higher. The 50 we can see has already started climbing from the mid of May. So has the 200 started climbing, and we expect the 50 to take the 200 and begun to cross higher as the right shoulder forms from a 143 to a 113 to test the left shoulder from the early February timeframe. So expect a pullback. That would be an ideal buying opportunity in NVIDIA. Pick up the NVIDIA as you can on that 50-day test at 116, or ideally the right shoulder test at 113, and then from there a breakout higher. The measured target from 86 to 143, you're talking about 57 points. At 57 to 143, you get a 200 round number. Beautiful round number. We think that's the target on NVIDIA. We are bullish on NVIDIA. And in fact, if you want to be more diversified and invest into the semiconductors like SOX L, or there are SMH, there are various ETFs of the semiconductor. You could invest in those and play this upside in NVIDIA. And it's not just NVIDIA, Marvell, AMD, a bunch of other silicon stocks or semiconductor stocks are going to benefit, in our opinion. So that's NVIDIA. We talked about Bitcoin, and we talked about something very interesting as a leading indicator. We see that it had its peak at 109 in January, and market peaked a month later in February. So it's a leading indicator by almost a month. So the 109 came, then it crossed that peak of 109 at 112 in May. So we believe in another few weeks, in June, S&P will cross its February high. So if Bitcoin crossed its January high at 109, hit 112, we believe, and we'll show you where we think S&P will cross it, 6147, likely hit 6200 before we see a 5 to 7% pullback towards the 5800. That's what we are expecting in the S&P in the next few weeks. So this is now got the pullback. It is likely going to form a nice right shoulder. So if you have to draw a neckline through kind of slanted, positively sloped neckline from 108, 109, 112, and climbing, we expect that this left shoulder was from 109 towards the 91, 90,000, back to 109. The head is at 74 to 112. So if we take 74 to 112, we're talking about roughly, say, 40, like 74 plus 40 is 114, 112 is 38 points. At 38 to 112, that's 150K. So we think as Bitcoin is headed to 150K, and we believe it'll happen this year, likely later this summer into early fall. We'll see this 150K as soon as the right shoulder forms. We can see already a bullish cross. This is called a golden cross. The 50 has crossed above the 200. Both of them are climbing, all very bullish indicators. And we can see that in this pullback, there's not been as much volume. So we believe a nice setup for an inverse head and shoulder in Bitcoin. Once the right shoulder forms, a great chance to buy GBTC, IBIT, or FBTC, the various ETFs for Bitcoin. And for those that are more aggressive, BITX is twice X of the Bitcoin. So it's BIT, BIT, and then add the X at the end. BITX is a good ETF to play for the twice X leverage onto a Bitcoin bullish climb. S&P 500, in our opinion, this is just the week that we just finished. It was a shortened week. We had Memorial Day on Monday, so it was 4 trading days in the week. We gapped higher when the market opened on Tuesday, and we can see throughout the week steadily maintained in that top of the gap. It came and tested the top of the gap at 58.40 or so, but did not go. That was a bullish sign. Did not come back and close the gap yet. It since then has recovered on Friday. We know that there was towards the late Thursday there was blockage of President Trump's tariffs by a few courts in U.S. and that created some market kind of uncertainty and so on. But into the second half of Friday, we can see that the market recovered and came back towards the highs of the week. And we expect the market is setting up for a higher high in S&P. Why? Look at this slanted neckline that I have drawn here. Very similar to the slanted neckline that you have in Bitcoin. So if you go and annotate Bitcoin and you just draw a line through these tops, 108 right there, right? If you draw that line through that, that's the positive slanted. This is the left shoulder, as I said, the head, and then the right shoulder in a similar way. Pardon my allergies. And then in a similar way, we look at S&P 500, and we can see that a slanted neckline, the 6,099, 6147. We believe the high that's coming up in the next week or two will be likely a little above 6,200. From there, we get the right shoulder pullback towards the 57, 57, 73, 5,800 level, a nice right shoulder, and then a breakout. That breakout from 48.35 towards the 6,200, you're talking about roughly 1,400 points. Add to 6,200, that's 7,600. That's hugely a bullish move. But if Larry Williams' forecast with the GDP is going to be extremely strong, he talked about inflation coming down, he talked about rates coming down, and then with the tax benefits that are coming through the Trump's policies are all going to be extremely bullish for the market. We'd be surprised to see a very strong move into 2026, climbing over from 62 towards the 7,600. That's the bullish picture that S&P is painting. A longer-term chart shows a beautiful hammer recovery. This kind of a long tail where intra-month, every candle here is a month. We had pulled down to test that rising 50-month moving average near 47.05. We didn't quite go down to 47.05. We know that the bottom was 48.35. But look at the recovery. By the time the month closed, we were way higher from the bottom. And from there, the follow-on month, that's a very bullish affirmation of this being a reversal candle. We reversed higher, formed a nice hammer reversal where we closed at the top of the range from where near we opened. And then the next month, a bullish, nice candle, a bullish hollow candle in white, where it opened at the lows of the month and closed at the highs of the month. And look, for the month, it has climbed over 6%, 6.15%. As I said, QQQ climbed over 9% for the month, and a key ETF for Bitcoin, GBTC, climbed 11%. So those are all bullish indicators. We believe the month of June, this to take out the 6147, get towards the 6200, towards late June into early July. We know that July 9th is a key date. That's a 90-day pause thing, the deadline for that. So into that, there'll be some uncertainty. Market will have some jitteriness, pullback. But then from July 9th onwards, we believe there'll be a resolution to the tariff. Market would love the certainty, and it's going to break out higher. So into the late June, into July 9th, that's a good time to buy the market as you get a pullback for those that are not have fully invested in the market, and then see decent upside and expect RSI to climb back towards the higher highs. We expect MACD to take out from below the zero center line and climb up to the positive region, and the market to climb higher highs. Look at the bullish percent. This is point and figure charts indicating in the 500 stocks in S&P 500, what are they telling us? Are they bullishly aligned or are they bearishly aligned? Turned out we had hit a number from near 10% of all the 500 stocks. Only 50 stocks were bullishly aligned to, that was in the April 7th bottom around that time frame, to 76% recently, pulling back. But look, in the last entire week, it didn't formed lower lows, it stayed flat at that 69 level from 76 to about 69.70. We expect this to climb in the next week or so as we kind of see that high of S&P near 6,200. And then in the pullback, maybe a little bit of a lower low, but then from there we expect the bullish percent to go towards the 80 to 90% of the stocks being bullishly aligned as we climb higher highs in the market. Summation index is a broader market breadth indicator. It's from the advanced decline line. This is a cumulative number, and it shows that it's much more smoother because they use the summation values to smoothen it out. But these typically turn at long-term durations. And this, if you notice back in the July to the September timeframe, it climbed, retraced a little bit, climbed higher highs, retraced a little bit higher highs. We expect a similar pattern to shape up on the summation index. It came back from a deeply oversold level near minus 590. Typically, it goes from minus 1100 to plus 1100. The fact that it didn't go to minus 1100 in the April bottom indicates a bullish divergence, as in it didn't go that weak. It was higher than the lows in October 2023 and October 2022. So minus 590 has climbed up to 688, similar to the level it had climbed here near 673. That slight pullback we saw into early August is what we're seeing now. Expect this to climb to a higher high, eventually reach the 1100 level. That's where we expect the summation index to climb, and once that climbs, then we get a pullback from it, a cyclical pullback from it. So I expect this to climb that level by the time S&P gets towards the 6,200 or so, from where we see that right shoulder pullback forming. So that's the summation index, and then finally, want to talk about small caps because that has been a bit of a laggard. It had not topped in February, but topped way back in late November, right after the Trump win euphoria climb. It had a sharp pullback from 241. This is the gap from the election results. Climbed to 241, pulled back to 225 sharply, and then back to 243. But that was the top. From there, it has been climbing lower highs, lower lows to the point where it started recovery after that 171, a sharp drop. So 243 to the 171 is almost a 30% drop in the small caps when S&P only dropped 23%. So there's a bigger drop. Both NASDAQ, QQQ, and small caps had a bigger drop. So 30% there. From 171, we can see it has climbed back to test a very key resistance level at 209 to 10. That's the 209. We've drawn a horizontal line. That's the neckline. The left shoulder here is 196 back to 209. Head is at 171 back to 210. We didn't come up to 196 quite, but we came to 199 and we tested that 50-day moving average, which is shown in blue, and the 200 days in red. It tested it beautifully and rebounded. A little bit of a gap at 203.25. It tried to come down and close that 203.54 within 25 cents, possibly into next Monday, Tuesday, we may close it. But from there, we expect a breakout of IWM. That breakout on the inverse head and shoulder from a 171 to a 210, we're talking about a 39 point. Add that 39 to the 210, that's 248 to 49. So that's where we think, because this isn't quite 171, this is closer to 172. So 172 to 210 is 38 points, and the 38 to 210 is 248. So that's the number, the measured value of the breakout if we get on the small caps. And we are quite confident that that's the way the small cap is setting up. So this is a good time to start accumulating the small cap ETF. One of the core ETFs is the IWM. It's the Russell 2000 small cap ETF. Now, sum it up, had a very, very, bullish forecast by Larry Williams, the, legendary Wall Street technician and market forecaster. He's got a cycle analysis. Shown here in blue is his cycles predicting, this was shown way back, that he had expected a climb into 2024, a pullback into 25, and then from there recovery, and that's exactly what we're getting. The blue line is his cycle line, the black line is what the real value market is showing, and we expect this to climb higher highs into later this summer as he's expecting in his cycle analysis. NVDA had a beautiful climb to its test of resistance at 143, come a long way from its April low at 86 to 143. That's a span of, you're talking about almost 60 points, 60 on 86. You're talking about roughly, 70% or plus rally. So amazing rally in NVIDIA. From there, we see a right shoulder pullback from 143 to 113, test its rising 50-day moving average near 116, and that inverse head and shoulder measures to a beautiful 200 round number. So that's where we think NVIDIA is headed. Bitcoin is forming its own inverse head and shoulder. The neckline slanted to the upward. having tested 112, we think right now it's in the process of tracing out a right shoulder move. Not sure how low it go, but potentially it could come down to the 98,000 to test its rising 50-day moving average to complete its right shoulder, and from there recover a climb higher. That's where we see Bitcoin headed. And the S&P 500, we believe, has a similar kind of an inverse head and shoulder with a slanted neckline. 6,200 could be its finishing of the head, and then a shallow pullback towards the 5,800 or so to form a right shoulder, and then the breakout. From 48 to 50, 48 to 62 is roughly 1,400 points. Added to 62 is 7,600. So huge upside in S&P going into next year is what we see. And maybe the Trump policies, his tariffs, his taxes are all going to be benefit. And then, the key being the inflation coming down and rates coming down as a result, helping the economy and the markets higher. With that, good luck investing. We'll talk to you next week. Thank you.